What if I told you that the biggest financial crises in modern history, from 1929 to 2008, weren't random events? What if they followed a predictable, four-stage pattern that a handful of legendary investors used to make fortunes? And what if I told you that exact same pattern is unfolding right now, pointing to a major event in 2025? In 1929, Joseph Kennedy, patriarch of the Kennedy dynasty, famously exited the stock market just months before the crash. He didn't just save his fortune, he made millions by shorting stocks as they plummeted. Fast forward to 2008. Michael Burry, the eccentric genius from The Big Short, analyzed mountains of data and bet against the subprime mortgage market. His reward? A personal profit of over $700 million. These weren't lucky guesses. They were calculated moves based on recognizing a hidden cycle. And right now in 2024, we are in stage 3 of that very same cycle. The titans of finance are making their moves. Warren Buffett is sitting on a record $325 billion in cash, his largest cash position ever. Jeff Bezos has sold over $13 billion of Amazon stock. Mark Zuckerberg has dumped billions in Meta shares. Insider selling is at levels not seen since just before the 2008 crash. Hedge funds are building massive short positions, betting on a downturn. This isn't just noise, it's the crash profit pattern repeating itself. So what is this four-stage pattern? Let's break it down, step by step, so you can see exactly where we are and what's coming next. Stage 1 is the smart money exit. This happens 12 to 18 months before a crisis. The smartest investors, the insiders, quietly sell their holdings at the top of the market. Back in the summer of 1929, Kennedy and his contemporary Bernard Baruch liquidated their portfolios. The Dow Jones hit its peak on September 3rd, and the crash began just weeks later. In the years leading up to 2008, from 2005 to 2007, Michael Burry was buying credit default swaps, a form of insurance against mortgage bond failure. John Paulson launched a dedicated fund to bet against the housing market. They saw the writing on the wall while everyone else was celebrating. Now look at 2025. This stage is already complete. Buffett sold a massive chunk of his Apple stock and is hoarding cash. We've seen the historic insider selling from Bezos and Zuckerberg. A key metric, the Buffett Indicator, which compares the total stock market value to the country's GDP, is screaming danger. A level of 120% is considered a warning sign. Today, it's sitting around 185%. Stage 1 is behind us. The smart money has already left the building. Next comes stage 2, buy volatility insurance. This happens 6 to 12 months before the event. This is where investors buy financial instruments that pay off when markets get chaotic and fall. In 1929, Kennedy used his cash to build short positions. He had to pay borrowing costs while he waited, but when the market collapsed, he reportedly made between $15 and $50 million, a colossal sum for the time. In 2008, Burry's credit default swaps paid out hundreds of millions. Paulson's fund made an astonishing $15 billion. More recently, in the March 2020 flash crash, investor Bill Ackman turned a $27 million hedge into $2.6 billion. That's a 96-to-1 return. Where are we now? This stage is active. We're seeing clear signs of this insurance being bought. The put-to-call ratio, which measures bearish versus bullish bets, is elevated. There's significant institutional buying of VIX calls, which are bets on future market volatility. And crucially, the cost of credit default swaps on commercial mortgage-backed securities has skyrocketed by 300 to 500%. Ackman himself has been publicly discussing his hedges. The insurance policies are being written. This brings us to where we are right now. Late stage 3. Short specific sectors. This is the most targeted phase, happening 3 to 6 months before the big fall. This is where you don't just bet against the market as a whole, but against the weakest links that will break first. In 2008, John Paulson shorted specific financial institutions like Lehman Brothers, Bear Stearns, and Washington Mutual right before they collapsed, making billions. So, what are the 2025 targets? 2 sectors are flashing bright red: commercial real estate, or CRE, and regional banks. Let's start with CRE. Right now, office vacancy rates are at a staggering 40 to 50% in many major cities. But the real-time bomb is the debt. Over $2 trillion in commercial mortgages are coming due in 2025 and 2026. These loans were financed at ultra-low interest rates, around 3%. Now they must be refinanced at today's rates of 7 to 9%. That's triple the cost. Many of these office buildings are now worth 40 to 60% less than the loans on them. We've already seen major defaults like Brookfield's LA Towers in early 2024. This is just the beginning of a cascade. This leads directly to the second target, regional banks. Why? Because their loan books are heavily exposed to commercial real estate, often making up 20 to 40% of their lending. Remember Silicon Valley Bank, Signature Bank, and First Republic? They all collapsed in the spring of 2023, and that happened without a recession. Imagine what happens when widespread commercial real estate defaults begin. We will see regional banks fail in clusters. Hedge funds are already identifying and shorting the banks with the highest CRE exposure. We are squarely in Stage 3. This leads to the final and most profitable stage, Stage 4, buy at maximum fear. This is what creates generational wealth. After the crash, when fear is at its peak and the news is predicting the end of capitalism, that is the moment to buy. After 1929, Joseph Kennedy scooped up depression-priced stocks and real estate, laying the foundation for his family's dynasty. In the panic of 2008, Warren Buffett invested $5 billion into Goldman Sachs, securing a 10% dividend plus warrants that made him billions. He did a similar deal with Bank of America in 2011. And in March 2020, Bill Ackman, after profiting from the crash, took his winnings and bought shares in great companies like Starbucks and Hilton at rock-bottom prices, leading to his fund's best year ever. This is exactly what the giants are preparing for in 2025 and 2026. Buffett is $325 billion isn't just sitting there. It's waiting for a 50 to 60% market crash to buy quality companies at decade-low prices. Private equity firms like Apollo, KKR, and Blackstone are sitting on hundreds of billions in dry powder, ready to buy defaulted commercial real estate for 30 to 50 cents on the dollar. The indicators are all aligned. The yield curve, which has predicted every recession since 1950, has inverted and normalized. The Buffett Indicator is at 185%. CRE defaults are accelerating. Regional banks are on shaky ground. Insider selling matches 2007 levels. Record cash is on the sidelines, and the big players are buying insurance and building shorts. So what can you do? This isn't about panicking, it's about preparing. Consider holding a larger portion of your portfolio, maybe 20 to 40% in cash or safe short-term T-bills. This gives you the dry powder to act when the opportunity arises. Some sophisticated investors might consider using a small portion of their portfolio, say 1 to 3%, to buy protective put options on a broad market index like the SPY, set to expire 6 to 12 months out. This acts as insurance that could return 5 to 10 times your investment in a crash. Most importantly, start preparing your list now. Identify high-quality, resilient companies with strong fundamentals that you'd love to own at a 50% discount. Think about businesses that provide essential services, have adaptable models and diverse revenue streams. When the market is down 50%, when fear is everywhere, and the media is telling you it's the end of the world, that's your signal. That is the buying opportunity of a lifetime. The pattern played out in 1929, it played out in 2008, and it is playing out right now. We are in late Stage 3, Stage 4 is coming. The smart money knows it, and now you do too. Thanks for watching. If you found this breakdown valuable, make sure to like, subscribe, and hit the bell so you don't miss our future updates as this story unfolds. Stay prepared.